Hey friends, welcome back to another video. In today's video, I want to go through my most favorite ICT setup, how I determine the daily bias, find my direction, and also I'll go into the core foundation, the core strategy of this video. If you haven't checked out my previous video, it was based on that foundation, the one time frame strategy, but on top of that, I want to add on my daily bias, also my confluence to make sure that I have a high probability trade, and the whole core concept is built on liquidity, the draw on liquidity. What I want to know or what I want to identify in my chart is I want to identify the next obvious likely liquidity. Can be buy side liquidity, can be sell side liquidity. All I want to know is the next likely draw on liquidity. I don't really care about whether it's going to be a bullish day close or bearish day close. All I need to know is where the price is next likely to draw to, the previous day high or the previous day low, moving on to the higher time frame. Personally, my favorite time frame to start with is daily time frame / higher time frame. What I mean by that is you can also use this in higher time frames such as weekly time frame or even the monthly time frame. Because price is fractal, first I identify my previous day high and my previous day low. Doesn't matter it's a bullish candle or a bearish candle. Once I have those key levels, I will look for entry patterns in the lower time frame. Before that, let me just quickly go through that. You can also apply this in the weekly time frame. You want to identify the previous week high or the previous week low. These are the most obvious draw on liquidity for targeting. Let's look at some examples so you have a better picture of what I'm talking about. Assuming that we are on an uptrend, the previous day closed bullish, so the most next likely draw on liquidity will be the previous day high. All I care about is the price gonna take out previous day high at certain point of time, ideally during the kill zone. It can be London kill zone or New York kill zone. Price can take out previous day high and close above it or close below it, or even close bearish. Doesn't really matter. All it matters is we know that the price is likely to take out the previous day high. Once I know that, I'll go down to my lower time frame to look for my entry pattern, which I will get into right now. My entry pattern is very simple. For any bullish setup, all I want to see is sell side liquidity taken, a liquidity sweep before a market structure shift with really nice strong displacement. Ideally, I want to see the candle close above my market structure shift level, and I want to see the price retrace into discount level where I can see a very clear fair value gap below that 50% level. You can pair this with OTE or order block for a higher confluence trade. I will have much more confidence if my fair value gap order block align or fair value gap OT align. For bearish setup, it will be everything in reverse. I want to look for that buy side liquidity taken with a market structure shift with nice displacement, ideally candle close below my market structure shift level, and I want to wait for the price retrace to a very nice clear fair value gap into the premium level before I take a shot. One key thing you need to remember for this strategy is that liquidity, because liquidity will be the trigger point and it will be the core concept to this setup. Okay, let's look at some examples. This is the daily time frame. As you can see, we took up our sell side liquidity and we are on a clear uptrend, and we have a market structure shift. Once we take out that relatively equal lows, we have a very nice bullish candle, and we do have another break of structure, a nice fair value gap. The price has been supported by the fair value gap and it failed to displace lower, and the price continued to go up, and now the price has retraced again back to our order block. And currently we are on a Friday. We have identified our previous day high and previous day low, so our next likely draw on liquidity will be going up, so our bias will be bullish. So all I want to see is price continue to go up and to take out my previous day high, and let's move on to the next day and see if we can get that price action. As we move on to the next day, on Monday, we didn't close above the previous day high. Even though we try to reach for it, we are ranging within that range, creating an engineered liquidity. We are forming false double top. This is where the buy side liquidity are resting. For my next day, Tuesday, my likely draw on liquidity will be still the previous day highs and taking out both days high, Friday and Monday. Before I go on to the lower time frame, I want to quickly share the power of 3, open, high, low, close. For any bullish day, we want to buy below the opening price. Ideally, this will give us a better price. So once we move on to the lower time frame, as you can see, we have a New York opening price, and the price has dipped below and take out the sell side liquidity and have a very nice displacement, taking out the Asian low and Asian session high. We have a very nice fair value gap forming and aligning with our OTE levels. That's where we're going to place a trade, and let's see what's going to happen next. So the price retraced back to our fair value gap, filling the gap and also respecting the order blocks and the OTE. The price triggered the entry and it went for the previous day high, which was the next likely liquidity grab that we were targeting. Let's move on to the next example. On the daily time frame, we are currently pretty much ranging, and we did take out our buy side liquidity. The order flow is bullish because we've been respecting bullish order block and fair value gaps. All the up close candles are supported by the down close candles. Our price action never break below all the down close candles. As you can see, we have a very nice bullish trend. Even though we have taken out our buy side liquidity at this moment, we are not going to short immediately because our price action is still showing bullish and we want to wait for that confirmation. Eventually we came back down and took out the sell side liquidity. This doesn't give us the confirmation that we are going bearish yet. At this point I will stay neutral and give it a little bit more time. So let's just be patient and we wait. So moving on to the next day, we did have a really nice big bearish candle. We took out the old low with a very nice displacement. At this point, my bias will be shifting to bearish and wait for that fair value gap to form. I will identify the previous day high and previous day low. Since we are bearish, I want to see the fair value gap being respected, and the next likely drawn liquidity will be the previous day low. And we are heading down to the lower time frame and we want to look for the entry pattern. First, we want to go to our kill zone. We are in New York kill zone. Previously, it has also taken a short-term high, the buy side liquidity, and we have a very nice market structure shift. And this is our fair value gap forming at this point. At this point, I'll place my trade at the low of the fair value gap, and we are bearish. Our bias align. On the higher time frame, we have a bearish bias, and even on a lower time frame, we have a very nice entry pattern form that we are looking for. Everything aligned, and let's see how it goes. You can see the price have very nice big momentum, and we get tagged in, and boom, there you have it. We are targeting that low and very nice 1 to 3 risk to reward ratio, and the price even went lower below the relatively equal lows, the sell side liquidity resting below all those lows. The price eventually take out the previous day low. Let's move on to the next example. On this daily time frame, as you can see, we have a very nice market structure shift and taking out the old low. We have a very nice displacement. This is our bearish order block, and we also have fair value gap confluence, and the price continue to go lower. Along the way, we have more bearish fair value gap forming. The price is respecting those levels as well, and we have another fair value gap forming. At this point in time, the price has rejected this fair value gap and the body never closed above or beyond this fair value gap. Since we are bearish, our next likely drawn liquidity will be previous day low, and let's see if we can get that price action. As you can see, we took out the previous day high, and that's fine. That might be the day that we took a losing trade, and that's completely fine. Even though we have a bullish candlestick, the price never closed beyond this fair value gap, and we have a nice rejection. Our target is still going to be the previous day low or eventually this swing low. Let's go on to the lower time frame. This is our previous day high level, and this is our daily time frame fair value gap. The price never closed and break beyond this fair value gap, and we have a nice market structure shift over here previous day, and we are still looking for bearish prices, targeting this previous day low, targeting this relatively equal lows. There are so many sell side liquidity resting below all these lows. Right now, all we are looking for is our entry pattern, but we didn't really get it, and the price has moved, and we're not going to chase the price, and let's wait if we're going to get any setup in the New York kill zone. As you can see, in the New York kill zone, we have a buy side liquidity has been taken, and we have a nice market structure shift with a nice fair value gap, and we have a bearish order block. We want to place our trade just at the fair value gap. The price has left without triggering our trade, and it eventually hit our target, which is the previous day low right over here. That's the end of the New York kill zone in the morning, and we don't really trade the afternoon session. Eventually, the price came back and tagged us into the trade, but that's beyond our trading time range, and we just have to let it go. That's a shame. It is what it is. Trading is all about being patient and following our trading plan and rules. If we didn't get a trade, and we just have to let it go and move on to the next trade. If you find this kind of video useful, give me a thumbs up, and also comment below what sort of videos do you want to see next. Thank you for watching. I'll see you guys in the next video.